The stock in focus today is Polycab India. It came out with its Q3 earnings, where we saw revenue was up 20%, EBITDA was up 26%, net profit was up 10%. Even margins improved a tad bit from 13.1 to 13.8. But the street is not reading that very well. And Puneet is joining us with a detailed report as to what has happened. Why is the stock tanking over 5% in trade today? Puneet, is it the volumes? What is the scene exactly here?
Well, they had some downward pressures because of, higher copper prices at the start of the quarter, and margins could have been bigger. But, the stock was almost down roughly 8 to 9%, and that's seen that slight recovery as we saw on the charts right now. So while, as you rightly said, results have beaten estimates on most fronts. Revenue, net profit is up almost 458 crores. Estimate was of 461, so meeting estimates there. But margins were the key aspects, coming in at 13.8% versus expectation of roughly about 12.5 to 12.8%. So it's beaten the aspect on margins, but the results are not as straightforward because there are a lot of moving parts for the company. If you look at the segmental revenue performance of the company, we've seen the wires and cables come at roughly 4,300 odd crores in terms of revenue. That's a growth of almost 12%, while the FMEG business, which is the fast-moving electrical goods, includes fans as well as other appliances, that has grown 21% in this particular time frame. That's one of the key things to watch out for. With that, there has been revenue growth in the wires segment, but one of the key aspects is that the EBIT margins could have been much better for something like a wires and cables, and that's where the downward pressure on the stock. We've seen a slight recovery from the lower bottoms of the company, but the recovery hasn't been because they had some margin impact of the higher copper prices. The other aspect is that EBITDA margins improved by 230 basis points on a quarter-on-quarter basis. Hence, that slight recovery, in terms of share price performance. Margins improved on the back of normalization of wires and cable margins at the end of the quarter. But, the stock is under pressure because of, downward pressure of copper prices over the last 3 to 4 quarters. That's continued again. So any kind of recovery is only baked in Q4 for the whole fiscal year to have a stronger margin impact as well. Apart from that, higher channel inventory of wires, as we mentioned at the start of the quarter, was the aspect. And the light and luminous segment, which comes under the FMEG business, has mentioned that they've had some strong growth as well as volume growth. One final aspect is that the company has retained its guidance of 20,000 crores in revenues for FY26. That was under the cloud. It is expected to beat that estimate because margins have been slightly on the downward side. But overall, commentary is something that's going to drive the performance of this stock going forward as well. Copper prices being one of them that's driving it because it's a commodity business. But overall as well, the recovery hasn't been as strong as expected because, it was expected to be a decent quarter. So overall, multiple viewpoints to be taken in this result. And, Polycab, I think the share price performance will be driven by the commentary in earnings conference call tomorrow.
All right.